On May 3rd, the U.S. Treasury yield curve, measured in 2-year versus 10-year, printed a 6-month high of negative 37 basis points. Now, since that time, it's collapsed to a current level near negative 80 basis points. That's the lowest level since mid-March. Is the deepening inversion with the yield curve signaling a growing belief that the Fed is in the process of tightening too far? Well, economic data has remained stubbornly high, particularly the most recent read of PCE, which has served to alter Fed expectations in the near term. On April 28th, the Fed funds futures market had the probability of an additional 25 basis point hike at 15% for the June 14th meeting. Now that probability has risen to over 70%, this according to the CME FedWatch tool. The futures market still, though, anticipates almost 200 basis points of easing by the end of 2024. The market seems to be telling us that we have underestimated the lag time for feeling the efficacy of Fed rate hikes. In other words, the slowdown is coming, but it's taking longer than we thought, and that the Fed will be forced to change course quickly as rate hikes finally reduce the demand in the economy. Now, if a trader believes that the yield curve will further invert from here, they could express that by buying the June micro 2-year contract at 4.36 and selling the June micro 10-year contract at 3.69. Now, this represents selling the spread at negative 67. A target could be set at March lows of negative 106, and a stop could be placed above at negative 40. Now, this trade could make $390 if the target is reached and risks $270 if you're stopped there at your level. Now, if a trader believes that the curve will head back higher, they could express that by selling the June micro 2-year contract at 4.36 and buying the June micro 10-year contract at 3.69, and this would represent buying that spread at negative 67. A target for this trade could be set at October highs of negative 25, and a stop could be placed below at negative 97. Now, this trade could make $420 if the target is reached and risks $300 if you're stopped out at your level.